Alrighty. It's actually early in the morning on Monday, November 5th, but I knew I'd be traveling on Tuesday. Um, so I'm trying to get this out to you today. What I want to talk about this week and what's keeping me up tonight, it all comes down to, or this whole week, down to elections. And will the Democrats win the House? That is our week this week. Everything happens Tuesday. The votes will happen after hours. There is nothing that will happen Monday or Tuesday that should matter. There is a time China, Xi again talks of commitment to free trade. Apple's earnings is already gone, and so the reality is here we are sitting and waiting for earnings to come up, elections to come up. Excuse me, a little bit late. And so it's keeping me up at night because here at 12:30 in the morning Mountain Standard Time, we have the Dow is down 80 points, the S&P futures is down 7, the Nasdaq's down 6.5. If I was to look at Asia, the Nikkei is down 1.5%, Shanghai is down 0.41%, Hang Seng is down 2.05%. It looks like the FTSE will right now is down 20 points, down 0.29. The DAX looks to be opening up to the downside, and the CAC is also looking to open up to the downside. So I might be jumping the gun, but for the next couple days, nothing on the horizon to do but wait for the after election market movements. Next week, I think no matter who wins, if the Democrats win the House or the Republicans keep it, I think you will see our market move higher. It'll probably start our Christmas rally. Will be dependent upon these election results and whether it starts if the Republicans win. I think Wednesday we go higher. If the Democrats win, we probably have a knee-jerk reaction, a big swoosh to the downside Wednesday, maybe Thursday. Maybe we pair our losses on Friday, come up a couple hundred points, and our run starts off the following week. The reason why I would say that is nothing more than the market loves certainty. And right now, there is no certainty. There is no certainty, but there appears to be a lot of worry. If you want to see an article about worry and volatility, Michael Verdon, I've got an article listed down here on his blog spot, the Michael Verdon blog spot. He has a recap of October, a pretty good explanation on volatility. His opinion, we're probably going down farther. In fact, I'm going to show an article here at the end that would agree we have some significant downside movement. And because of that, you need to be on your toes. So it's going to sound bad, but on Monday, if people were to ask me what I'm going to do, I'm going to say questions. If possible, I will be rolling protection up to at the money prices for most, if not all, of my equity positions. Now, someone did make the comment, well, I don't like equity or single risk, but that's usually how you beat the market. ETFs, indexes are moving as much as single equities right now. I do think with the higher volatility, when you hit volatility in that 15 to 25 range, it doesn't seem like you're going to get any help or protection from your indexes, your ETFs. The diversification is not necessarily protection when you see volatility in that higher range. With that said, what's happening this week and why? Obviously, it's elections, and we'll look at our markets Wednesday pending the market's reaction. So Tuesday will drive me crazy. All the talking heads will drive me crazy. And believe it or not, I will most likely be out of touch. I'm going to stay away from it all. I will go fishing on Tuesday so I don't get sucked into knee-jerk reactions. So I don't feel like I have to make decisions. Other than that, we do have a couple things that are somewhat interesting. We seem to have home builders reporting along the lines of, who was it? Beezer Homes. And I think the other one was Beezer Homes is on Tuesday. Home Depot somewhat goes with home builders, but where's my other one at? D.H. Horton. D.H. Horton Home Builders with Home Depot. D.H. Horton reports on Thursday. For me, one of the stocks is Disney. And I'm looking for a 122 all-time high to 125 pop in the stock on, again, movie revenues. That would be what I think is going to move Disney right now. And they're somewhat isolated. The worry about our trade war. So, a couple things I'm looking at that are a little bit different. I'm just going to say I also have a new way I am currently working my technical analysis. So I'm going to bring up my technical analysis chart. I've added a couple things in here. I'm still keeping my 50 and my 200 day. This is the S&P 500, but I am now adding a couple of my favorites. My Williams percent R, and I'm going to bring up a couple charts to show you why I'm looking at it, but my Williams percent R right now says we're above the median line, but it's heading back down. My Williams percent R, I really spend most of my attention on the oversold and overbought metrics. It's a medium statistics chart is what it really is. And I am paying attention to that. It doesn't tell me anything. So you'll also notice right now, I have pivots on my charting. Let me see if I can't make this a little bit different for you to see. I'm more worried or going to pay more attention to pivot really over the last 6 months, but let me see if I can't bring it in on a 3-month chart. I'm looking at pivot points. I want to see where downside positions are. Obviously, a pivot point is going to be at the 200-day simple moving average, 275.64. They have one at excuse me. Let me try this again. Pivot points are areas where stocks are going to move back and forth around. 200-day moving average at 27.64. Have a important pivot point at 27.51. If we break that pivot point, our next leg down is 25.60. $23.63. The next leg down below that is $24.15. I'm trying to pay attention to where pivot points are to give myself an understanding of what I might see the next drop in our stock market, where I might be worried about a drop or movement that can affect or help me judge where I can see potential movements in potential up or downside opportunities in my stocks. I'm going to put this back out to 6 months. And I also want to bring in Apple because that's one that got crushed on Friday. Let me bring in the Apple chart here. Again, as I was to look at Apple, we're just entering the oversold. So I would expect Apple, even on some bad news, probably not to fall below the 205 mark, maybe the 200 mark. Interesting, if you look at pivots again, they have 205.48. They have 192.09. My mark to look for is going to be that 205.48. I do not think it'll drop down below that because they've passed their earnings, and Apple now has the ability to put their billions of dollars to work to start to buy shares. I think you'll see Apple create or float an Apple put that will protect that stock. Unfortunately, you probably won't see it get above that 219 range. So all pivots are resistance and support levels based on the past history of the stock. Not much more downside movement at 205, upside at 219. I could see a swoosh again based on our elections, where at 192, maybe 193, 194, I might cash in some puts because I've got some extra technical indicators that are telling me that we are looking for a bounce. And these pivot points are those areas, support and resistance, where you'll most likely see a bounce. With that said, I mentioned I have Disney coming up. Let me put Disney in here. Some of you asked 122 to 125. Yes. Where's our downside at? Unfortunately, I think you will see that we'll blow through it, but on the high side, it's 124.32 with a pivot point at 119, but I believe we'll probably pass through that relatively quickly on good earnings. Our downside risk, 110, 105, another pivot point would be 100. My expectation, though, on Disney would be a pop up to that 122 to 125 range. The only reason I'm saying 122 is because that would be its all-time high. Right now, a little bit to the downside, a little bit to the downside. We also do have the 200-day simple moving average at 106 and support at 113.44. There's plenty of support for a good earnings on Disney to the downside, which leads me to aim for that 124.32 pivot point or that 122. Excuse me, this is the 124.32 pivot point. I'm looking for a movement to 122 to probably 125. So that's going to be what I will stay in front of my computer and watch. And I believe that is going to be on the 8th after the market close. So on Thursday, I'm going to be tuned to my iPhone, my computer. I'm going to be watching Disney and find out what's going on. So I am looking at a couple pivot points now for stock. Looking at Williams percent R, and again, I'm going to just go through the averages really quickly. Dow Jones Industrial Average closed at 25,270, down 10% from the highs for the year. But just taking a quick peek, pivot point that's our protection for it right now is 23,841. Our second one is 2567. Those are the downsides that I see for an election. Kevin, what about the 200-day moving average at 25,124.62? It stayed above it 2 days now. I'm looking for usually 2 to 4. The reason why I would say that it would not be one of my support levels comes down to that Williams percent R. It looks like we're bouncing off of the overbought. Well, Kevin, we're just getting crossovers on the MACD. Chances are that will no longer show as a crossover. It'll be as a schmeld where they kind of touch each other for a little while. Something like this, and expectations it'll probably head back down. So I am spending a little more time on the chart. I showed you the S&P 500, the SPX. Let's bring that up one more time. SPX, just as a quick review here. We have it bouncing off of the median line on the RSI. Below the 200-day, it just appears to me it's going to go lower, maybe not even with the need of the elections. If we bring up the NASDAQ, we're in the same position as the Dow. We have the median line on the RSI, once again, acting as resistance. We have a bit of resistance here. We have the 200-day at 75.1914. We're sitting at 73.56, which means we have resistance at 70.45, 79.67, obviously some higher highs at 86. And let me get that off for you. 86.29. In all reality, my expectations after some election results following these pivot points, 67.83, 62.80. Actually, that's 62.60, excuse me. I just see more downside movements. So I'm going to do the best I can to avoid those. Little interesting way at using some of my favorites, pivot points, which are nothing more than resistance and support levels, and Williams percent R. That's what I used to use before I was trained on some other technical uses with some technicals. Now, there's a lot of other technicals that are out there, but I want to use the ones that the majority of the market's going to look at. With that said, looking at the Dow Jones Industrial Average, obviously I'm going to say it's still bearish. We did regain the 200, but news will most likely pull it down as it will start off tomorrow. S&P 500, technically bearish, have the 200-day to get over. And the NASDAQ, technically bearish, have the 200-day to get over. Just think about it. It's elections. Get out of the way of a moving train. When people ask me what's happening this week and why, where our markets end this week, I said it depends on election results. But people, investors, fund managers seems to be getting out of the way from the moving train, or they just don't want to catch that falling knife right now. So where are we going to end S&P 500? I'm going to say up, and it'll be 2.5, which means we'll most likely have a 6% growth off of the highs. I make changes down to a 0%, depending on how far we fall after the elections. How far we go up after the elections, I'll put this to a 6% right out of the gate. Earnings, I'm going to pay attention to Lowe's, Sohu, because I trade Baidu, Mosaic. I said Pandora last week, but it looks like Pandora is reporting on Monday now. Tuesday, Beazer Homes, Home Depot, JD.com. Again, JD.com because I do trade Baidu. Wednesday, Coors, Office Depot report, C-Trip, Murphy Oil, Marathon Oil are there. New Skin, Qualcomm I will follow. Square I will follow because I follow Visa. Thursday, Cardinal Health, Crocs, DH Horton Homes, JCI, which is Johnson Controls, Activision, Century Tel, Yelp. My biggest mover here is Disney. Not much by way of economic reports. It will be interesting to listen to the FOMC rate decision statement that comes out on Thursday. Looking for any dovish tone to Powell. Maybe he's going to be a little influenced by the pressure that's on him. Maybe the last 4 weeks have made him worry, although our average work week numbers and our GDP numbers look to be pretty good. Internationally, we have the services PMI number for the European Union and most of the countries over in Europe on Tuesday. Wednesday, Japan's leading indicators and European Union's retail sales. The China trade balance and also the trade balance with the U.S. will be some important events to look at. Thursday, there's a lot of Japanese reports coming out that I'm not paying too much attention to, but you may want to look at those. And then on Friday, China's CPI and PPI for their inflation. We'll see if they're a little hot, so to speak. How am I looking to trade? Earnings are coming up, but as I told you, I would be rolling my possible equity positions. If anything, I want to make sure that I am protecting myself for those earnings, the election events that are coming up. I guess it's results. I don't know why I'm not saying this correctly, but it's election results that I want to watch out for. Couple interesting articles that I wanted to pay attention to. There's a major reason for the sell-off that the people are missing. It's only getting worse. I've probably shown this to you 2 or 3 times, but again, it's the strength of the dollar. A pretty interesting article to look at the strength of the dollar and how it's affecting sales overseas. There are a lot of international companies, a lot of companies that do business overseas. Every time our dollar strengthens, it will affect those. It has an unfavorable impact on the bottom line, whether it's the commodities to build or overseas sales. Could also come in the way of fuel. Interesting Ford article. I just put in here because I trade Ford. For those of you that are in Ford, might want to read this one. We have posted revenue growth and beat estimates. I believe this is why you've seen it retake 200. It fell back on Friday, but an interesting article on China. I was hesitant in putting this in here, but the market is showing a similar pattern to peaks in 2000, 2007. And I put this in here. It's an interesting read. It's only in here because I like the charting that makes it simple, but it really comes down to David Stockman's comments. All it is mathematical. David Stockman warns a 40% stock market plunge is closing in on Wall Street. He's been worried about it for about 6 months. What he's trying to say is he was really worried and thought it was going to come in February, but it did not. So it's interesting because I thought I heard him warn about it in February, and I think he was wrong. But his comment, no one has outlawed recessions within a year or 2 of one, saying we're within a year or 2 of one. He added fair value of the S&P going to next recession as well below the 2,000, 1,500 levels way below where we are today. So he's issuing his dire warning. Unfortunately, what leaves me at a little bit of a pissed off because he didn't have to go there. If you're a rational investor, you only need 2 words in your vocabulary: Trump and sell. Again, he's blaming this on Trump, but I think Trump will be exasperating it. Trump has not caused the inflow of money from the Fed, from the government, quantitative easing. We put a Band-Aid on our 2008 recession, which means, Kevin, it was down 38%. Most got out at 46%. Took between a 46 and a 54% loss. Yes, but we Band-Aid what was happening for a typical payment for the overinflated numbers for all those years in the financial markets, for the overinflated housing market numbers, the Caterpillar and material, John Deere material stocks, all had overinflated numbers due to what was happening in the financial market. Instead of taking a 66% drop, we took a 30% drop. We have a pretty good drop coming in the future. It is scary. It could be another 1685 drop. That would be an important number on the S&P 500. It could be a 1225 drop or a 1220 drop. We will have our next correction is going to be, as they say here, brutal. It's not a Trump fault. It's our past leadership. It's the past decisions that were made. The Fed is doing an experiment. And I want to say Bernanke, right? They did the best they could to salvage our financial industry and our home market. I think they did a good job. I'm not sure I would have done too much different by way of putting a Band-Aid on our economy. That doesn't mean we can't have to pay for that today. It only exasperates it when we have Trump alienating some of our allies and pissing off China in general. So again, he's not the reason, but he is playing with fire, quote unquote, at the very top of an aging expansion, or at the very top of a bull market that's run its course. So pretty interesting. I don't like the way he said it, but I do respect Stockman. A pretty interesting understanding that our next correction is going to be difficult. It'll be ridiculously difficult, and we need to be prepared for it. I do like a little comment that we go by here. When you take care of the risks, the profits will take care of themselves. Take care of the risks, and the profits will take care of themselves. Pretty interesting. Anytime you've seen a run 10 years in your stock market, 10 years in a stock, expectation is the bottom's going to fall out. That should be a clear warning, red flag. Bottom's going to fall out, and it'll be a pretty dramatic correction. It's the way the stock market works. It's nothing new. That's just the cycle of the markets. Rarely, if ever, have we gone through a 10-year bull run. Bonds have gone through a 32-year bull run, but in our stock market, this is about the longest in history bull run that we've had in our stock market without a correction. Corrections are coming. Not only that, a bear market correction will be up to a 40% drop or more from where our markets are at right now. So that doom and gloom. Go fishing on Tuesday if you can. I would suggest on Monday you try to move what can to at the money by way of protection or long puts, maybe even double up on some, and be ready for wild Tuesday, Wednesday, Thursday. Again, Tuesday, go fishing and ignore it. Come back Wednesday and see how much of those long puts you're making up, or rip them off if we see a positive reaction to our market with maybe the opportunity for the Republicans to hold the House. Guys, I appreciate this week. Sorry I'm not doing this on my standard Tuesday evening, but I will look forward to meeting and talking with you next week. That will be on November 13th. Everyone have a wonderful week, and I will talk to you next week. Bye-bye.